Hey gang, Czar here. I hope all is well. Trust you're having a good day. I want to talk a little bit about mastering the fear of entering a trade. It's something that I'm hearing more and more lately, and especially with those who are using funded trader programs for their trading. Now, of course, most traders have experienced the debilitating effects of the fear of entering a trade or the fear of pulling the trigger on a potential opportunity in the market. And the truth is, entering any trade can be a daunting task, especially for day traders who are navigating the volatility that comes with intraday price action. In fact, the fear of making a wrong decision can paralyze even the most seasoned and experienced traders. Sometimes that fear can last a single trading session, or it can expand out over several weeks or even months. But it's very much a human thing, right? So addressing the fear of entering a trade is an ongoing process that requires a great deal of transparency and self-awareness and dedication. So where does all this fear come from exactly? Well, I think that most people would agree that fear in any area of our lives usually comes from uncertainty, right? And the fear of the unknown. But that fear is especially potent when there's a very obvious and well-known risk involved on the other side of that decision. For example, losing your money, like it is in trading, right? Of course, day traders face the constant challenge of trying to predict market movements over a short time frame. And they have to do this thing over and over again, sometimes many times in a day, which is not something I recommend, by the way. But the first steps to overcoming or managing this type of fear is to openly acknowledge the source and understand that uncertainty is an inherent part of trading, and that will never go away. In fact, uncertainty defines trading to the core, and uncertainty in trading is a constant. It's not going anywhere. One of the primary sources of fear in trading stems from the very nature of uncertainty in the capital markets. Almost every other profession on earth comes with predictable outcomes and predictable incomes, right? Predictable revenue streams, predictable working hours, predictable daily functions, whereas trading involves making decisions in an environment where the variables are constantly shifting and changing, and all of the outcomes are uncertain or unknown. So the reasons to fear making decisions and entering trades are real, and we need to start by acknowledging that this uncertainty is a fundamental aspect of trading. In fact, we will need to embrace it or consider the idea that maybe trading is not for us. I won't pretend that it's more complicated than that. There's nothing in it for me to hide that harsh reality from you, right? I'm going to say it again. We need to embrace the uncertainty and the fear or consider the idea that trading might not be for us. So what else goes into this fear equation? Well, a big piece of it is the fear of making wrong decisions. Traders are often haunted by the fear of making wrong decisions that may result in losses. The pressure to be right all the time or most of the time can be paralyzing. But I want you to think about this for a moment. Traders risk losing money and experiencing pain if they make the wrong decision. But they also risk losing money and experiencing pain if they make the right decision. Can you see this? The market doesn't care if your decision to enter was right or wrong. It just moves up or down or sideways after you've entered. The wrong decision can cost you money, and the right decision can cost you money, because the outcome of your trade is uncertain or unknown at the time of entry. So the reasons for your fear are very real. They're justified. Now, I have some students who are trading with funded accounts or a combination of personal and funded accounts. And in my experience, the funded account trader has even greater struggles with the fear of entering trades because they've worked hard to acquire the funding through passing certain challenges and finally have the ability to trade with some significant size. But the rules of engagement are different with funded accounts than with personal accounts because the entire funded account can be shut down on them because of failing on one single metric. One decision or one trade can blow the whole account in essence. So, fear of entering trades is normal. Fear of entering trades will never fully go away. Fear of entering trades is an expected part of the game. This is what impulse control is all about. You will never delete or eliminate the emotions or impulses, but you will have to acknowledge them every single day and manage them by putting them in their proper place. There are also very important functional things that you can and must do in order to manage these most natural of fears. The first one is to establish a robust trading plan. A well-defined trading plan acts as a roadmap, providing you with clarity and a structure for your trades. Your trading plan should include rules around entry and exit points, risk management strategies, and a clear criteria for trade selection in the first place. When you have a solid trading plan in place, it becomes a reliable, structured anchor that will help you to alleviate the fear that comes with uncertainty. The second thing you will need to do is to embrace risk with proper position sizing. When you finally implement a resourceful position sizing model, great things happen. Ideally, you would never risk more than about 1% of your trading capital on a single trade, and you would risk the same amount on every trade. This not only protects your account, but it will dramatically reduce the fear of substantial losses. Using consistent R values and fixed position sizing will also allow you to begin thinking in terms of R multiples instead of points or dollars, and this is a very powerful shift in perspective for most traders. Every loss you take is just one R, and your model delivers a surplus of Rs over time, right? The third thing you can do is to practice mindfulness and visualization. Mindfulness techniques such as deep breathing or meditation can help you stay present and focused. Visualization is another very powerful tool that I use, but these things are the subject of another video altogether. So in short, it's normal to sometimes fear entering trades. Every time you engage with the market, it has the power to hurt you. The risk is very real. So acknowledge and own the fear. It's not going away. Try to engage the market less frequently, but with optimal setups only. Flawlessly execute the rules of your trading model. And if you don't have rules or a trading model, then you should be terrified of entering a trade. That's the first thing you need to accomplish. Implement fixed R-value position sizing so that every trade is the same in terms of risk. And then incorporate mindfulness, meditation, and breathing exercises into your daily routine. You can do this, but it will demand elite performance every day. Thanks for being here, guys, and for sharing this journey with me. I appreciate you. Have a great one. We'll talk soon.